Hello everyone, welcome to the Invest Master channel. Today we're going to talk about how to start investing with little money. Many people think that investing is only for those with large amounts of money, but in reality with the right strategies, you can invest with even a small amount of capital. I'll show you that you don't need a lot of money to start investing. Let's dive in. You don't need large amounts of capital to start investing. In fact, starting with small amounts of money is one of the most effective ways to grow your wealth. Let's break down how you can begin with a small capital. Open an investment account. To invest, you first need to open an investment account. This can be done with banks or online investment platforms, many of which offer low-cost options. Use your savings to invest gradually. At first, you might not be able to invest large sums, but you can still begin by investing small amounts. Set aside a regular portion of your income to invest, and over time, these small investments will grow. Create an investment plan. Create a plan to decide which investment vehicles you will focus on. This plan should consider the level of risk you're comfortable with, your goals, and your investment horizon. Having a plan makes it easier to make strategic decisions. The key to successful investing is not only about returns, but also managing risks and having patience. Diversify your risks. Instead of putting all your money in one investment, spread it across various assets to reduce risk. For instance, you could invest a portion in stocks, another in bonds, and another in real estate or mutual funds. Think long-term. While short-term profits are tempting, a long-term investment strategy helps you make larger gains with less risk. Many successful investors have made substantial profits by holding their investments for years. Monitor and review regularly. Once you start investing, make sure to review your investments regularly. Adjust your strategies based on any changes in the market, but remember to stay calm and avoid making emotional decisions. You don't need a large amount of capital to start investing. There are many investment vehicles that you can begin with a small capital. These investment options should be selected based on your risk tolerance and goals. Some of the investments you can start with small capital include stocks. Investing in stocks is a great way to start with small capital. You can buy shares of companies listed on the stock exchange and become a shareholder as the company grows. However, stocks can be volatile, so it's important to conduct thorough research before investing. ETFs, exchange-traded funds. ETFs are an excellent option for starting investing with small capital. Many ETFs offer a bundle of different stocks that trade on the stock exchange. This allows you to invest in multiple companies with a single transaction. ETFs can help increase portfolio diversification and distribute risk. Cryptocurrencies. Cryptocurrencies have become popular in recent years and are a great option for starting with small investments. You can invest in major cryptocurrencies like Bitcoin, Ethereum, or smaller altcoins. However, cryptocurrencies are highly volatile, so you need to be careful. Digital assets and crowdfunding. With small investments, you can also invest in digital assets and crowdfunding projects. Many platforms allow small investors to start with low budgets and get involved in big projects. When investing with small capital, it's important to avoid high-risk investments. This helps minimize the risk of losing your money and ensures a steady growth of your investments. Here are some low-risk investment strategies. Dollar cost averaging. Regular investing is an effective strategy, even with small capital. In this method, you invest a fixed amount of money at regular intervals, for example, every month. This way, you buy at an average price without being affected by market fluctuations. Savings and low-risk investments. If you have a small capital, it's smarter to focus on safer options rather than high-risk investments. Low-risk investment options include bonds, fixed income investments, or savings accounts. These may offer lower returns but provide stable income and a safer portfolio. Long-term investing. When investing, it's important not to rush and to think long-term. Investments made with small capital can grow in value over time. Long-term investments typically offer safer and more profitable returns. Portfolio diversification. Diversifying your portfolio is crucial when investing. Putting all your money into one asset class is risky. By investing in different asset classes, you can spread your risk and make your portfolio safer. A diversified portfolio consisting of stocks, bonds, ETFs, cryptocurrencies, and other investment vehicles can provide solid returns over time. One of the most crucial steps when starting to invest is creating a strategy. Investing is not just about putting money into different assets. It's about having a plan that helps you achieve your financial goals. Here's what you should consider when creating your strategy. Set goals. What are you aiming for with your investments? Are you planning for the short term or the long term? Clearly defining your goals will help you choose the right investment options for your situation. Risk tolerance. Understand your risk tolerance. If you're comfortable with high-risk investments, you might opt for stocks or cryptocurrencies. However, if you prefer a safer approach, consider bonds or ETFs. Investment time horizon. Your investment timeline will influence the types of investments you choose. Long-term investments tend to have less risk and grow over time, while short-term investments may offer quicker returns but come with higher risk. When starting with a small amount of capital, it's essential to focus on low-cost investment options. Low-cost options allow you to minimize fees and maximize returns. Here are some low-cost investment tools to consider. Robo-advisors. These platforms offer low-cost, automated portfolio management services. Robo-advisors create and manage diversified portfolios based on your risk tolerance and investment goals. ETFs. ETFs are an excellent low-cost option for small investors. These funds allow you to invest in a broad range of stocks or other assets, providing diversification at a low cost. Once you've started investing, it's essential to regularly monitor and evaluate your investments. The market can fluctuate, and your investments might change over time. Here's how you can keep track of your investments. Track performance. Regularly check how your investments are performing. Are they increasing or decreasing in value? Which investments are performing better? Monitoring performance helps you decide which investments to focus on in the future. Diversification. Diversifying your investments over time reduces risk and increases your chances of success. As you grow your portfolio, consider adding new assets to spread risk and ensure a more balanced approach. Risk versus return assessment. Evaluate your risk and return expectations regularly. High-risk investments often promise high returns, but they also come with greater potential for loss. Ensure that your investments match your risk tolerance and financial goals.